pour les prochaines journées de l'industrie. Notre objectif est de partager les mises à jour pertinentes, d'apporter des précisions lorsque cela est possible et de continuer à établir une communication bidirectionnelle entre CANAF et les secteurs sur lesquels nous comptons chaque jour. On behalf of all of us at FINTRAC, thank you for taking the time to be here. Your work as reporting entities is central to Canada's anti-money laundering and anti-terrorism financing regime, and this collaboration is vital to the continued protection of Canadian and the integrity of our financial system. With that, it's my pleasure to now turn it over to our Director and CEO, Sarah Paquette, for her introductory remarks. Thank you and enjoy this session. Over to you, Sarah.
Bonjour tout le monde. Good afternoon, everyone. Thank you so much for joining today. It's a privilege to be here with so many professionals across sectors who shared a common goal. And what is this common goal? The goal is to protect Canadians from threats of money laundering, terrorist financing, and sanction evasions. Que vous soyez dans la conformité, les politiques ou l'application de la loi, vous êtes tous essentiels à cette mission. Mon nom est Sarah Paquette, je suis la directrice et PDG de CANAF. I'm FINTRAC's director and CEO. So I want to start by saying everything we do, it starts with you. The reports you submit, the risk you assess and mitigate, the clients you identify, and the records you keep. These are the foundation of Canada's AML ATF regime. C'est grâce à votre travail quotidien que nous pouvons agir. Vos efforts alimentent les renseignements qu'on produit et les enquêtes qu'on soutient. Over the past few years, we've been clear and we have seen clear direction from the federal government. The Strong Borders Act, introduced in June, reinforced Canada's mission to secure our borders, fight fentanyl, and dismantle organized crime networks. Ce n'est pas juste une question de frontières. C'est une question de sécurité pour nos communautés, de protection pour les victimes et de lutte contre le financement criminel. The government's commitment is also visible in new resources and partnership. FINTRAC representatives have been seconded to the Office of Canada Fentanyl SAR. This is to ensure that the intelligence on illicit money inflows is directly informing national strategy. We have also launched a rapid intelligence production team. And since last year, that team has produced more than 100 disclosures. And those disclosures have been linked to the seizure of 46 kilograms of fentanyl, 122 firearms, and almost $1 million in cash. So when we work together, that's the kind of results we can get. So our focus is clear, saving lives. That's the reason we all come to work in the morning. So who can do it alone? I think you know the answer to that. No single law, no single unit, no single agency can achieve that alone. Which brings me to the foundation of all our work, which is risk. Risk is at the heart of everything we do. How we understand it, manage it, and respond to it. This is why this is the first big theme for today. This summer, Canada released its latest national risk assessment. You will hear more about it today. Ce document n'est pas juste théorique, il vous aide à repérer les vulnérabilités dans vos secteurs et à adapter vos programmes. It shapes your SDR reporting, guides your interpretation of FINTRAC alerts, and helps you apply our sector-specific guidance. We also updated our own framework. Our new risk and supervisory framework reflects 25 years of experience and today's reality. Yes, we celebrated our 25th anniversary last summer. So we've broken down risk into three categories: operational, strategic, and reputational. Ça nous aide à mieux cibler les failles potentielles et à renforcer notre surveillance là où c'est nécessaire. We're also using your data more effectively through structured requests and advanced analytics to spot patterns and target oversights. Understanding risk is just the beginning. The real impact comes when we act on it. We've matured as an AML ATF supervisor. Today, our framework rests on 3 pillars: monitor, enforce, and engage. Monitor. We use a risk-based lens to guide oversight. We look at your client profiles and delivery channels and how you mitigate vulnerabilities. Enforce. We act decisively when there's serious or repeated non-compliance. The Strong Borders Act proposes new fines, up to 20 million for entities, 4 million for individuals. That is a clear signal. Compliance is not optional. And it's not a cost center as well. You heard me say that before. Enforcement will be proportionate, but also firm. We will consider past history, harm caused, and time to correct deficiencies. Engage. We're moving towards targeted engagement. Webinars tailored to sectors' needs, like one of today, direct conversations where risks are highest, and clearer feedback. Les comités comme le groupe de travail public-privé restent des canaux clés pour collaborer avec vous. Today, you'll also hear about FINTRAC's new industry review. It's designed to help us understand how different sectors detect and report risk, especially priority threats. Le but, vous donner des outils concrets, des contrôles, des signaux d'alerte, des exemples pour renforcer vos programmes. Today, you'll also hear speakers on key issues of beneficial ownership and STR reporting. We know that insiders can enable fraudulent transactions using hidden ownership structures to launder illicit funds. This is why we have requirements on beneficial ownership to surface and report these transactions. Des changements s'en viennent. Today, we'll walk you through what's required, what's coming, and what to expect. So, what does it all mean? It means we are at a pivotal moment. Financial crime is more complex, the environment is changing, and FINTRAC is evolving. But we cannot do this alone. We need you, your commitment, your insight, and your action. C'est ensemble qu'on va réussir. That's how we'll meet the expectations of the Financial Action Task Force, who will be evaluating Canada this fall. Yes, I'm talking about FATF. Some of you may meet the examiners. It's our chance to show the progress we've made since 2016. Let's keep protecting Canadians. Let's keep strengthening our financial system. And let's keep working together. Merci beaucoup.
Thank you so much, Director, for setting the stage and for your perspective on the importance of today's Industry Day. I hope your points on collaboration and preparedness resonate with our attendees through today's event. So before I go to the next session, I would like to remind everyone to use the Q&A function. If you have any questions during the session, please include them in both language. For our next session, I would like to introduce Evangeline Ducas and Nguyen, speakers from the Department of Finance, as well as our own Ryan Andy and Yulia Mish, speakers from FINTRAC, who will present on the 2025 National Risk Assessment. The 2025 National Risk Assessment is an essential tool that offers a comprehensive evaluation of the most significant money laundering and terrorist financing threats and vulnerabilities currently facing Canadians. It is very important for all of us to really understand it and use it as well. Without further ado, I will turn it over to the presenters. Thank you.
Good afternoon. Can everyone hear properly? My name is Hugh Nguyen. I'm joined today by my colleague Evangeline Duca. We are officials from the Department of Finance Canada at the Financial Crimes and Security Division, where we led the development of Canada 2025 National Risk Assessment. We would like to thank our colleagues at FINTRAC for organizing the first Industry Day and offering us this opportunity to present on the National Risk Assessment to Canadian business. So first, I would just start with an overview on the National Risk Assessment. Canada's most recent update to our National Risk Assessment, or our NRA, was published on the Department of Finance website in August 2025. The National Risk Assessment represents the Government of Canada's most current understanding of money laundering and terrorist financing risk at the national level. Information that feeds into the NRA is sourced from a variety of verified and reputable channels, both internal and external to the Government of Canada. The 2025 report incorporates information from Canada's 13 anti-money laundering, anti-terrorist financing regime partners, provincial and territorial authorities, the private sector, international partners, and academic institutions. I would like to touch on the role of the National Risk Assessment. The Financial Action Task Force, or the FATF, is the global money laundering and terrorist financing watchdog, and the AML-ATF, Anti-Money Laundering, Anti-Terrorist Financing International Standard Setter. FATF Recommendation 1 requires that country identify, assess, and understand its money laundering and terrorist financing risk. Canada complies with this requirement, in part through the NRA. The NRA also provides the basis of Canada's risk-based approach to money laundering and terrorist financing, prevention, detection, and enforcement. It helps guide Canada AML-ATF policies and program priorities to be responsive and proportionate to evolving risk. Businesses regulated under the Proceeds of Crime, Money Laundering, and Terrorist Financing Act, or the PCML-TFA, are also required to identify, assess, and take effective action to mitigate money laundering, terrorist financing risk. Next slide, please. So, as you know, Canada has published 3 national risk assessments to date in 2015, 2023, and 2025. Each iteration of the National Risk Assessment reflects an evolution in methodology to refine the assessment. However, the core approach of each NRA has remained the same. Risk is a function of inherent threat, inherent vulnerabilities, and consequences. Each NRA remains an inherent risk assessment. This means that all risk ratings reflect the level of risk without the application of mitigation measures. Money laundering and terrorist financing threats are assessed separately in recognition of the fundamental differences between these crimes and their associated actors. Sectoral assessment includes inherent vulnerabilities to both money laundering and terrorist financing, since the actors that tend to seek to exploit the sectors seek to exploit the same sectoral weaknesses. So for those of you who are familiar with Canada National Risk Assessment Report, you may notice that the 2025 report looks different from its predecessors. This is because the 2025 report introduces various methodological refinements. These include a distinct assessment of money laundering threats and threat actors. There's a recalibration of various rating criteria. In the assessment of money laundering threats, more emphasis is placed on the estimated proceeds of crime when assigning a threat rating to more accurately reflect the materiality of the threat. The terrorist financing assessment focuses on actors with clear financial link to Canada and their financing methods. In the sectoral vulnerability assessment, the 2025 NRA includes an application of a residual risk lens to highlight policy, supervisory, enforcement, and importantly, industry compliance measure to mitigate risk. Finally, the 2025 National Risk Assessment benefited from broad consultation with private sector, federal, provincial, and territorial government partners, and the nonprofit organization sector. So before I hand it over to my colleague Eva for a deep dive on the 2025 assessment result, I will distill some high-level takeaway from the report. Can we move to the next slide, please? So among the money laundering threat, illegal drug trafficking has persisted at the highest money laundering threat in Canada over the past decade. Fraud, trade-based financial crimes, and tax crimes are also rated high. Canada's terrorism financing landscape remains low volume and low value overall. Inherent sector vulnerabilities remain largely stable, with some technology-driven changes, such as there's an increased vulnerability for crypto assets, crowdfunding platforms, and online casinos, where risks are rapidly evolving. Terrorist groups and actors increasingly using cryptocurrencies to raise and move money to finance attacks. Next slide, please. Canada continues to monitor. I think we're going backward on the English. Thank you. Perfect. Thank you. Canada continues to monitor other emerging trends impacting the Canadian money laundering and terrorist financing risk landscape that are not necessarily assessed and assigned a rating in the 2025 report. Emerging risks from foreign interference, including the financing methods that can support malicious actors. There's been a growing nexus between terrorism and transnational organized crime, which may influence future money laundering and terrorist financing assessment and law enforcement response approaches. The increased use of professional third-party services to launder proceeds of crime. New and developing technology, including artificial intelligence, cryptography, decentralized finance, pose both threats and vulnerabilities, both threats and opportunities. The growing consequences of misinformation and disinformation, stereotypes, and implicit bias, which may adversely impact risk assessment and the implementation of a risk-based approach. Finally, changing domestic and international regulatory frameworks, which can drive regulatory arbitrage and display risk. I'll now pass it over to Eva, who will take us through more detailed summary of the 2025 NRA. Thank you.
Thank you very much, Hugh, for the helpful overview. I will now turn to the specific findings of the 2025 National Risk Assessment, beginning with an overview of Canada's national money laundering threat landscape. As mentioned earlier, the 2025, can we just go to the next slide? Perfect. As mentioned earlier, the 2025 National Risk Assessment identifies illegal drug trafficking, fraud, commercial trade fraud, and trade-based money laundering, and tax crimes as the highest money laundering threats in Canada. Highest threat offenses typically involve proceeds of crime 1 billion or more and transnational organized crime groups that are sophisticated in their laundering methods. Next slide. Among all predicate offenses assessed in the 2025 report, drug trafficking continues to pose the greatest threat of money laundering in Canada. This has been a persistent trend across each of Canada's 3 national risk assessment reports. Transnational organized crime groups are the principal players supplying Canada's drug market and trafficking drugs into and out of the country. These organized crime groups are highly sophisticated and capable in their money laundering activities using highly organized professional money laundering networks, Cash remains prevalent in the laundering of the proceeds of illegal drug sales, as to the exploitation of various business sectors, including money services businesses, banks, and casinos, and payment products like payment cards and crypto assets. Next slide, please. Fraud is also assessed to pose a high money laundering threat in Canada and has been observed as a dynamic and emerging threat area. Sophisticated domestic and transnational organized crime groups are involved in most fraud types and use multiple money laundering methods. Fraud continues to evolve rapidly with the development of new technologies such as artificial intelligence, cryptocurrency, and social media. Incidents of fraud have grown in the past 5 years. The Canadian Anti-Fraud Centre received reports of over $638 million in fraud losses from Canadians in 2024. While this amount is staggering, it is likely a vast underestimate as fraud is known to be significantly underreported. Next slide, please. Commercial trade fraud and trade-based money laundering also pose a high money laundering threat. These crimes leverage trade flows and techniques to launder proceeds of crime from a variety of predicate offenses. Both organized crime groups and terrorist actors are known to rely on trade-based money laundering techniques, typically facilitated through professional money laundering networks. Next slide, please. Tax evasion and other tax crimes are the final predicate offenses assessed to pose a high money laundering threat in Canada. These crimes generate a very high value of proceeds of crime on an annual basis and involve professionals such as accountants, lawyers, financial advisors, and sectors such as real estate to facilitate money laundering. Specialized criminals, including organized crime groups, often commit tax crimes using offshore companies and accounts. Next slide, please. While I've focused our presentation today on predicate crimes that pose the highest threats of money laundering, that does not mean that other assessed threat types are unimportant or should necessarily be deprioritized. For instance, various predicate offenses assessed as posing a medium threat to money laundering have grave societal consequences, such as money laundering associated with human trafficking or child sexual exploitation materials, which allow some of the world's most depraved criminals to benefit from their crimes. The Government of Canada continues to prioritize operational and policy responses to each assessed threat identified in the National Risk Assessment in accordance with its risk-based approach as outlined on this slide. Next slide, please. I will now turn to an overview of the assessment of terrorist financing threats in Canada. Next slide. The 2025 Terrorist Financing Assessment focuses specifically on ideologically, politically, and religiously motivated threat actors with a direct nexus to Canada. These categories align with federal legislation and reflect how Canadian authorities conceptualize, prioritize, and respond to threats to the security of Canada. Overall, Canada's terrorist financing landscape is characterized by low volume and low value financial flows. Most terrorist financing involving Canada goes abroad to fund terrorist groups in high-risk jurisdictions. There is little evidence to suggest that funds flow into Canada to finance domestic terrorism. Next slide, please. Despite these small transaction volumes, Canada continues to highly prioritize anti-terrorist financing measures due to the severe consequences of terrorist activity of any type. This includes upholding a comprehensive legislative framework and operational programs to address the issue. In recent years, Canada has also introduced regulations under the piecemeal TFA for emerging business sectors particularly vulnerable to terrorist financing, such as crowdfunding and cryptocurrencies. The government also engages directly with the not-for-profit sector, a subset of which is particularly vulnerable to terrorist abuse. Terrorist financing-related controls for this sector are also upheld by the Canada Revenue Agency with assistance from other government departments and agencies. Next slide, please. I will now turn to the 2025 assessment of money laundering terrorist financing vulnerabilities in Canada. As mentioned earlier in this presentation by Hugh, it is important to remember that risk is a function of threat, vulnerability, and consequence. Money laundering and terrorist financing risk emerges when threat actors seek to exploit vulnerabilities across Canada's economic sectors to launder money or finance terrorism. The remainder of my remarks will focus on the Government of Canada's assessment of these sectoral vulnerabilities. Next slide, please. Canada continues to assess a very broad range of business professions, corporate structures, and financial products for their vulnerability to money laundering and terrorist financing in the 2025 National Risk Assessment. As noted earlier, the assessment of Canada's inherent vulnerabilities remains relatively stable across the 2015, 2023, and 2025 National Risk Assessments, with some notable changes related to technology, particularly for crypto assets, crowdfunding platforms, and online casinos. Nonetheless, these inherent vulnerabilities are largely mitigated through anti-money laundering and anti-terrorist financing regulation under the piecemeal TFA and supervision and enforcement by FINTRAC as our national anti-money laundering and anti-terrorist financing regulator. While the slides in this presentation note the specific mitigating measures for each sector, given the limited time and the volume of information that we have to cover, I will only speak to those with mitigating measures that differ from the more standardized piecemeal TFA framework and FINTRAC supervision model to help contextualize Canada's vulnerability landscape in these areas. Next slide, please. Canada's six systemically important banks, or DSIBs, pose the greatest vulnerabilities of all financial entities in Canada. These entities are characterized by a very high volume, velocity, and frequency of transactions with broader geographic reach, greater exposure to high-risk jurisdictions, and a large number of cross-border clients when compared to other domestic banks. Other domestic banks, foreign bank subsidiaries and branches, trust and loan companies, and credit unions and caisse populaires are also assessed as highly vulnerable. Foreign bank branches and subsidiaries often rely on their parent companies located outside of Canada or third-party outsourcing arrangements. They target services to diaspora communities and foreign clients. The vulnerability profile of trust and loan companies is driven by their role in trust account creation and management, as well as the delivery of complex loans and real estate transactions. Credit unions and caisse populaires can facilitate international transactions, large or rapid fund movements, and cash transactions, and are exposed to third parties. In contrast, life insurance, financing, leasing, and factoring sectors have a medium level of vulnerability. Most life insurance products and services are low risk. However, they can be abused for money laundering to integrate proceeds of crime into the financial system. Factoring companies are vulnerable to misuse for money laundering during the layering stage of money laundering and may be exploited in cases of commercial trade fraud and trade-based money laundering. With regards to financing and leasing, criminals are known to prefer lease financing in the case where an asset may be subject to law enforcement seizure. Next slide, please. Canada's security sector continues to be assessed as highly vulnerable to money laundering and terrorist financing due to its significant transaction value and volume and significant assets under management. Entities in this sector offer a broad range of products and services that are vulnerable to money laundering and terrorist financing. The sector has a diverse range of clientele with a small portion of high-risk clients, including non-residents of Canada, politically exposed persons, high net worth persons, clients engaged in occupations exposed to heightened vulnerabilities, trusts, and corporations. The availability of services via online brokerage or for brokerages or for tradable financial and crypto assets and automated digital advisory programs, also known as robo-advice, can also raise the vulnerability profile of some of the businesses operating the security sector in cases where face-to-face identification processes are not possible. Next slide, please. Canada's money services business sector is large and diverse, representing nearly 3,000 businesses in different market segments, which vary in risk exposure and vulnerability. Retail service MSBs and informal value transfer systems, such as Hawalas, Hundi, and Feichen, continue to be assessed as very highly vulnerable. Money service services are highly accessible with a high degree of geographic reach to high-risk jurisdictions and high-risk clientele. Crowdfunding platforms, payment service providers, and armored car companies are also regulated as money services businesses in Canada under the piecemeal TFA and are assessed to be highly vulnerable. Crowdfunding platforms quickly pool large amounts of funds from large numbers of donors, often across borders. Payment service providers are vulnerable to money laundering and terrorist financing activities associated with smurfing, invoice fraud, and offshore accounts. Armored cars are cash intensive and can be misused to obscure the origin of funds. Check cashing businesses and white label ATMs are assessed to display a medium level of vulnerability. Check cashing is particularly vulnerable to layering and fraud, and white label ATMs are vulnerable to criminal control. Next slide, please. Similar to other countries, Canada assesses the crypto asset sector as being very highly vulnerable to money laundering and terrorist financing. Crypto assets have global reach and accessibility, enabling rapid cross-border transfers and exposure to high-risk clients and jurisdictions. Convertible and anonymity-enhancing crypto assets pose the greatest vulnerability across asset types. Other vulnerable services include decentralized finance platforms, also known as DeFi, initial coin offerings, or ICOs, peer-to-peer transfers, and mixers and tumblers to enhance anonymity. Crypto ATMs in Canada play a key role in the placement state of money laundering, and cryptocurrencies are becoming increasingly attractive for terrorist financing. Next slide, please. Thank you. The accounting sector in Canada continues to be assessed as posing a medium vulnerability to being exploited for money laundering and terrorist financing. The vulnerabilities faced by the profession are driven by many of its unique features. Accountants have specialized knowledge and expertise in financial and tax advice, including company and trust formation that may be exploited either wittingly or unwittingly for illicit purposes. Sorry, I think we're on the wrong slide here. We should be on accountants. I'll just continue. The sector is commonly referred to as the gatekeeping sector, given that it is highly integrated with other financial sectors and professions that can facilitate access to financial services on behalf of their clients. The sector is also highly exposed to certain categories of clientele, which are inherently higher risk from a financial crime perspective, including high net worth individuals, politically exposed persons, and cash-intensive businesses. Right, now we can go ahead to the real estate sector. Real estate sales representatives, brokers, and developers continue to be assessed as highly vulnerable to money laundering and terrorist financing in the 2025 National Risk Assessment. This is largely due to their involvement in transactions that touch a wide range of other vulnerable sectors, including facilitators like lawyers and mortgage providers, mortgage and title insurers, and due to their exposure to high-risk clients such as politically exposed persons and foreign investors. Though most real estate transactions are not complex and completed in a face-to-face setting, some are becoming complex due to their use of digital identification and signatures, as well as the use of third parties in complex corporate ownership structures to enable money laundering. Mortgage lenders are assessed to pose a medium vulnerability, given that they offer vulnerable products with potentially complex financing arrangements and business operations. Ownership structures of some types of private lenders or entities providing them with capital can also be highly complex and opaque. Mortgage lenders are integrated with multiple sectors and can be exposed to high-risk clients, including politically exposed persons, foreign investors, and individuals working in cash-intensive businesses. There's also an increasing prevalence of non-face-to-face transactions in this sector. Mortgage brokers are also assessed to have a medium level of vulnerability as they offer services with limited complexity and minimal direct handling of funds, and their customer due diligence scope can be narrow, for example, with a limited PEP determination. Nonetheless, mortgage brokers have an important part of Canada's anti-money laundering and anti-terrorist financing framework. So they have a sightline of the financing of real estate transactions that can be leveraged for anti-money laundering and anti-terrorist financing purposes, such as to detect suspicious borrowers. Next slide, please. Both online and brick-and-mortar casinos are assessed to have a high vulnerability to money laundering and terrorist financing. While casinos provide a limited number of vulnerable products and services, they conduct a large amount of business across Canada, most of which is cash-intensive and highly transactional. Very important person or VIP services pose particular vulnerability, as the clientele typically can have significant funds and may include higher risk individuals. Casino clientele include politically exposed persons, high net worth clients, non-Canadian residents, and individuals in vulnerable businesses and professions. The rapid expansion of online gambling in recent years adds further complexity to the sector by increasing transaction volume and velocity. All transactions are conducted online through non-face-to-face interactions and can involve intermediaries. Fraud and the subsequent layering of the proceeds from these offenses poses the greatest risk for the regulated online gaming sector. The rapid expansion of online gaming has created new and novel betting products and associated risks. For example, the rise of peer-to-peer sports betting and online poker carries collusion risks that can facilitate money laundering and terrorist financing, such as chip dumping. Next slide, please. Dealers in precious metals and stones, also referred to as DPMS. That sector is assessed as highly vulnerable overall. Specific vulnerability ranges by subsector, with wholesalers such as bullion markets. Sorry, can you hear me? I think I froze for just a second. Good. Okay. Sorry. Okay. I'll just restart here. Well, the DPMS sector is assessed as highly vulnerable overall. Specific vulnerability ranges by subsector, with wholesalers such as bullion markets at greatest risk of exploitation for money laundering and terrorist financing. Dealers in precious metals and stones are easily accessible to domestic clients through brick and mortar, as well as through retail websites and online marketplaces. In some cases, Canadian dealers in precious metals and stones are accessible to international clients. Many dealers in conduct a large volume of business in high-value goods, some of which are commodities that are particularly vulnerable to money laundering. The highest vulnerability is ascribed to commodified precious metals and precious stones, which are of high value, potential high liquidity, limited traceability, and ease of transport. They are negotiable worldwide and can be exchanged for cash or used as an alternative form of currency. Value finished jewelry has a lower level of vulnerability because of the loss of value upon resale, making it an unattractive option for storing and transferring value. Next slide, please. Several corporate structures exist in Canada which vary in risk exposure and vulnerability, with corporations and express trusts posing the highest degree of vulnerability. The high degree of vulnerability for corporations is driven by their vast global reach, as they can be established anywhere and undertake business globally, including in high-risk jurisdictions, and be used to move, conceal, or convert illicit funds. Express trusts are also highly vulnerable due to their complexity and global reach. These trusts can be located abroad, complicating law enforcement investigation and the freezing and seizing of assets. Partnerships have a medium level of vulnerability, particularly when structured to conceal beneficial ownership. Company service providers, which are entities that help set up corporations and legal arrangements in Canada, have a medium level of vulnerability due to their ability to construct complex structures and act as nominees to facilitate money laundering. While corporate structures and company service providers are not directly regulated under the piecemeal TFA, they are subject to various federal, provincial, and territorial regulatory requirements that lower their inherent vulnerability. Notably, a publicly accessible corporate registry launched by Corporations Canada in 2024. Regulatory requirements for reporting entities to report discrepancies to the registry came into force on October 1st, 2025. Next slide, please. While Canada's legal sector is composed of lawyers, notaries, and paralegals, the 2025 National Risk Assessment is focused on lawyers and notaries in certain provinces, given that they offer specific services that can be vulnerable to money laundering and terrorist financing abuse. All lawyers in Canada and Quebec notaries are highly vulnerable as they provide high-risk legal services, including operating trust accounts, creating corporate arrangements, and performing real estate transactions. Notably, solicitor-client privilege and professional secrecy protections upheld by the sector can pose barriers to law enforcement investigation. British Columbia notaries provide a restricted range primarily for residents of the province and have a medium level of vulnerability. This sector is not bound by solicitor-client privilege and secrecy protections, lowering their vulnerability profile relative to their Quebec counterparts. While BC notaries are subject to of anti-money laundering and anti-terrorist financing, smell TFA, and supervision by FINTRAC when engaged in prescribed services, The regulatory approach for other legal professions in Canada differs. Lawyers and Quebec notaries are members of Canada's 14 provincial and territorial law societies, which self-regulate the legal profession and impose certain anti-money laundering and anti-terrorist financing rules. Since 2019, Canada has maintained a working group with the Federation of Law Societies of Canada to explore issues related to high money laundering and terrorist financing risks in the legal profession and strengthen information sharing between parties. This concludes my overview of the 2025 National Risk Assessment. I want to thank everyone very much for the opportunity to present to you today. I will now turn over to our colleagues at FINTRAC, who will walk us through how the National Risk Assessment is applied in supervisory planning and what it means for reporting entities.
Thank you so much, Eva, and good afternoon, everyone. My name is Yulia Mish, and I'm the manager of the Risk Oversight Unit in the Supervision Sector at FINTRAC. I'm joined today by Ryan Handy, Assistant Deputy Director of Operations. I'd like to begin by thanking our colleagues at Department of Finance for their excellent overview of the Canada's National Risk Assessment. Their presentation sets the stage for the next part of today's session, which Ryan and I will be leading. Dans cette section, nous nous concentrons sur la manière dont CANAF utilise l'évaluation nationale des risques pour soutenir la surveillance fondée sur les risques et sur la manière dont les entités déclarantes sont censées utiliser l'évaluation nationale des risques pour renforcer leur propre programme de conformité. Je commencerai par une explication comment le secteur de surveillance applique l'évaluation nationale des risques dans nos propres processus. Puis, Ryan vous expliquera ce que signifie pour les entités déclarantes, en particulier qu'est-ce que ça signifie pour les entités déclarantes et comment l'utiliser dans vos propres évaluations de risque. We can move to the next slide. It is important to know that FINTRAC is not just an end user of the National Risk Assessment. We actively contribute to its development and refinement. Many of the insights that we gather through our supervisory activities, including trends, observation, and sector-specific findings, are fed back into the NRA process. These insights help us update and enrich sector profiles, ensure that the National Risk Assessment remains dynamic and responsive. The feedback loop strengthens both our planning and broadens our national understanding of money laundering and terrorist financing risk. With this context in mind, I'll now walk you through how FINTRAC supervision applies the NRA in practice, specifically how we use to guide our annual planning and selection of reporting entities for supervisory activities. That includes how we identify sector-level risk, assess entity-level exposure, and tailor our supervisory oversight accordingly. Each year, FINTRAC supervision begins its planning process by reviewing the National Risk Assessment sector vulnerability profiles, which provide detailed insights into the threats, vulnerabilities, and typologies associated with different business sectors. These profiles are used to assign sector-level vulnerability ratings, ranging from low to very high, which serve as a foundational input into triaging supervisory priorities. These ratings help us to determine which sectors are more exposed to money laundering and terrorist financing, and therefore require closer scrutiny. From there, the sector vulnerability ratings from the National Risk Assessment are used as a key indicator within our supervisory risk model, alongside other factors such as geographical exposure. The outputs from the supervision risk model are then supplemented by additional risk insights, including strategic intelligence, past assessment outcomes, information from our stakeholders, and credible open source information. All of this information is brought together in an annual risk outlook, which informs our recommendations on the type, intensity, and frequency of supervisory activities. This layered approach allows us to move from a broad sector-level understanding to a more granular entity-level risk assessment. Based on this comprehensive risk profile, we select and prioritize individual reporting entities for supervision. The nature of our engagement, whether it's a full-scope examination, targeted review, questionnaire, or outreach, is tailored to respond to the reporting entity's assessed risk level. This ensures our oversight is proportionate, targeted, and focused on the threats of greater risk. While the National Risk Assessment is a key tool for regulators like FINTRAC, it is also meant to support reporting entities. It helps businesses understand the risk in their sector and build a stronger compliance program. To explain how reporting entities are expected to use the National Risk Assessment, I'll now turn it over to my colleague Ryan.
Merci, Yulia. Can you just give me a thumbs up that you can hear me? We're good. Et merci d'avoir mis celle-là en place du point de vue du CANAP. Bonjour à tous. Je m'appelle Ryan Handy. Je suis directeur adjoint délégué des opérations de surveillance ici à CANAP. N'hésitez pas à poser vos questions dans la langue de votre choix. As the lead for supervision operations at FINTRAC, I will now turn to how the National Risk Assessment can be actively applied to help mitigate money laundering and terrorist financing risks. So this translates into clear expectations for you as the regulated businesses listening in today and as reporting entities. So I'll outline 7 key areas where these expectations certainly come into play. Firstly, it's expected that businesses integrate the NRA into their own risk assessments. It's important to use the NRA, as a starting point for understanding the money laundering and terrorist financing risks that apply to your sector and your operations. It's a tool to help you identify where your risks are and how to manage them as a regulated business under the PCML-TFA. Second, it's expected that businesses align their risk-based approach with the NRA. The NRA helps businesses focus their efforts where it matters most, on the specific threats and the vulnerabilities within their sector. So, for example, dealers in precious metals and stones face higher risk from anonymous cash purchases of gold and diamonds. In practice, this could mean stronger client checks, closer review of high value or repeat transactions, just to highlight an example. Thirdly, it's expected that businesses leverage FINTRAC guidance and strategic intelligence. Dans ce contexte, les entreprises doivent compléter l'évaluation nationale des risques par d'autres documents publiés par le CANAP, notamment des lignes directrices, des rapports de renseignement stratégique et des alertes opérationnelles, afin de se tenir au courant des risques émergents et en constant evolution. So it's important to bring in other types of FINTRAC products in the broader context into your consideration for risk. So, for example, I'll cite FINTRAC's recently published operational alert on the laundering of the proceeds of fentanyl trafficking. It's expected that you, as regulated businesses, incorporate the content of this product into your own risk models. That could lead to enhanced monitoring, for example, for flow-through accounts, virtual currency misuse, and nominee activity linked to synthetic opioid trafficking. Fourth, it's expected that businesses implement and maintain enhanced know your client and client due diligence obligations. So the NRA helps businesses identify which clients and relationships carry high risk, guiding the use of appropriate due diligence measures. For example, in the securities sector, clients who quickly sell low-value securities and transfer the proceeds offshore may warrant closer review. Fifth, it's expected that businesses align their transaction monitoring and reporting with the NRA. La mise en œuvre des conclusions de présents documents permettent aux entreprises de mieux détecter les comportements suspects et d'améliorer la qualité et la rapidité des déclarations à CANAP. So incorporating NRA findings enables businesses to better detect suspicious behavior. So, for example, in the credit union sector, frequent below-threshold cash deposits followed by rapid e-transfer activity may suggest flow-through account use, particularly in remote or cash-intensive regions, and that should prompt timely submissions of suspicious transaction reports. Six, it's expected that businesses align risk-informed compliance programs with the NRA. So FINTRAC expects the NRA to inform the design and ongoing refinement, ongoing is important, ongoing refinement of compliance programs generally, ensuring that they remain risk-informed and aligned with regulatory expectations. So for example, a life insurer could strengthen controls around early policy redemptions and third-party premium payments, which the NRA flags as indicators of layering and nominee risk. And lastly, let's not forget, it is expected that businesses understand that FINTRAC may assess NRA integration into your compliance programs. So the NRA sets clear expectations that businesses will integrate its findings into their risk assessments and compliance programs. So it should be no surprise that FINTRAC may conduct assessment activities that include a review of this foundational expectation. Could we go to the next slide, please? So let's dive deeper into industry expectations. Here, I will use financial institutions as helpful examples. Je sais que ces diapos sont chargées, mais elles peuvent constituer des références utiles à l'avenir. So building on the NRA, FINTRAC's identified distinct risk profiles and typologies across vulnerable sectors such as banks and money services businesses. So we'll offer additional practical guidance for how these sectors can strengthen their own compliance programs. So to start, banks and MSBs are amongst the most vulnerable sectors in Canada, as our colleagues from finance mentioned, with domestic banks and retail multi-service MSBs assessed as having very high inherent vulnerabilities. These sectors can be exploited by organized crime groups, professional money launderers, due to their high transaction volumes, global reach, accessibility to high-risk clients, and exposure to products and services that can be used in the placement, layering, and integration stages of money laundering. So let's look at banking risk profile. The NRA notes 4 key risk categories here. Client risk, broad and high-risk client base, including politically exposed persons or PEPs, non-residents, high net worth individuals, and clients with complex ownership structures. Next risk profile, product risk. That sees exposure through diverse products such as electronic funds transfers, prepayment products, virtual assets, and cross-border services. Another risk is channel risk. It's the way the product is delivered. So a mix of face-to-face, online, and third-party delivery channels. And lastly, geographic risk. Of course, global exposure, particularly through remittance corridors and corresponding banking relationships. Now let's look at some key typologies in this sector, in the banking sector. The NRA notes a number of money laundering typologies, or to put it another way, recurring patterns or methods used by illicit actors to attempt to exploit the services of specific sectors. Ainsi, pour le secteur bancaire, les typologies courantes comprennent les suivants. So, trade-based money laundering. Criminals can disguise illicit funds through manipulated trade transactions, such as over and under invoicing, phantom shipments, all financed through legitimate banking channels. Structuring. So transactions can be deliberately broken up to avoid triggering reporting thresholds, as we know. Cuckoo smurfing, which is also referenced in the NRA, illegal funds are deposited into accounts of unsuspecting individuals expecting legitimate transfers, effectively laundering money through legitimate remittance flows. Money mules, shell ownership, underground banking, and fraud typologies, which can include capital markets fraud, mortgage fraud, identity theft, and mass marketing scams. So let's move on to the money service business sector, and we'll go through the same pattern of risk and typologies, and then we'll get to what to do about it. So the NRA notes the same 4 key risk categories for the MSB sector, with some differences in the way the risks present. So in terms of client risk, we see diverse and transient based, including non-residents and clients with limited financial footprints. In terms of service risk, we see vulnerable services, including domestic and international funds transfers and currency exchange. On the channel risk, heavy reliance on cash, non-face-to-face transactions, and third-party involvement. And lastly, geographic risk. So similar global exposure to high-risk jurisdiction via remittance corridors and correspondent relationships. Typologies. So again, what type of illicit actor typologies can we see attempting to exploit the MSB sector? Firstly, we see structuring and money mule activity, similar au secteur bancaire, unregistered MSBs facilitating informal or illicit fund transfers, identity fraud. We've seen the use of stolen or synthetic identities to access financial services, rapid cross-border movement, quick fund transfers across jurisdictions to obscure audit trails, and lastly, virtual assets, which can often be used to conceal the source and destination of funds, often bypassing traditional financial controls. So, now that we have these two sectors, now that we have a clear understanding of the common risk profiles and typologies that illustrate how businesses can be exploited, let's shift focus to what comes next, which is implementing effective mitigating measures to address those risks. So, some examples, I put them all together. Some examples for banking and MSB sectors might include the following mitigating measures. Firstly, applying enhanced due diligence, or EDD as we say, for high-risk clients such as politically exposed persons, high net worth individuals, non-residents, foreign buyers, and clients with suspicious patterns. Those suspicious patterns could include additional identity verification steps. They can be addressed by that. They can be addressed by frequent updates to client and beneficial ownership information. It could also be addressed by the collection of supplementary information, such as source of funds, transaction purpose, and leveraging publicly available information. Another mitigating measure could be leveraging transaction systems to detect unusual patterns, like transaction structuring, rapid movement of funds, irrational volume of transaction, etc. And transaction monitoring to look for transaction involving high-risk jurisdictions or jurisdictions of concern. Conducting regular AML training for staff across operational and compliance roles is an expectation, of course, and periodically reassessing client and business relationships. Assessing those risks based on behavioral changes or emerging risk factors is essential. And I emphasize periodic. This is not a static process. So if you're representing out there the banking or MSB sector, these insights are not just theory, they're practical tools. Using the risk indicators, typologies, and controls identified by the NRA and FINTRAC, we can help build a stronger compliance program and protect your business from being used for financial crime. On to the next slide, please. So let's jump into designated non-financial businesses and persons. So this time around, we'll use the casino and real estate sectors as examples, both of which present unique vulnerabilities due to their transaction types, client bases, and service models. So casinos and real estate reporting entities are among the highest risk, what we call DNFBPs, for money laundering in Canada, with brick and mortar casinos and real estate agents and developers assessed as having high inherent vulnerabilities. The sectors can be exploited due to their cash-intensive operations, high-value transactions, exposure to high-risk clients like non-residents, and integration with other vulnerable sectors such as the legal and financial services. Criminal actors use techniques like structuring, the use of nominees, rapid property flipping, chip cash-outs, and chip cash-outs to hide the origin of illegal funds and to integrate them back into the legitimate economy. So let's have a look at the casino sector first. We'll look at the risk profile. It comes in three key risk categories. Firstly, client risk. Client risk patrons make up diverse and transient clientele, including high net worth individuals, politically exposed persons, and non-residents. Operational risk can include highly cash-intensive environments with large volumes and high-value transactions. And the channel risk can present exposure to anonymity and third-party involvement, including non-face-to-face interactions. And now let's look at some typologies. And as I noted earlier, these are recurring methods that are used by illicit actors that can be sector-specific. So what we see in this sector are unusual betting patterns. So frequent cash-ins and cash-outs, inconsistent with typical gaming behavior, Structuring, common across many sectors, of course, but here chip purchases and redemptions are broken into smaller amounts to avoid reporting thresholds. Money mules, third parties are used to move illicit funds through casino transactions. Rapid fund movement transfers between casinos and across borders to obscure audit trails. We see identity fraud, use of stolen or synthetic identities to access casino services, and virtual assets. So increasing use of digital currencies to conceal the source and destination of funds, particularly in the online gaming space. Now we'll move to the real estate sector, and then we'll sum it up again with some practical applications. So in the real estate sector, we see 5 key risk categories. The first, the transaction risk. High-value property transactions with complex financial flows. Client risk includes domestic and foreign buyers, investors, and developers. Service risk includes vulnerable offerings such as property purchases, investments, and financing. Sector integration, so real estate intersects with other high-risk sectors, as we know, like legal and financial services. And of course, the geographic risk. So the exposure to high-risk jurisdictions by international transactions and foreign ownership. And what sort of typologies do we see in this sector? Firstly, property valuation manipulation. So the under and overvaluing real estate to disguise illicit funds. We see layering through transactions, multiple payments using cash or negotiated instruments, shell companies and nominees used to conceal beneficial ownership. Identity fraud, the use of fraudulent or stolen identities in property transactions. Money mules, again, third parties to facilitate payments sourced from illegal funds. Rapid flipping, so successive buying and selling of the same property to obscure the origin of funds. And lastly, international transfer, so the use of cross-border fund movements to exploit jurisdictional gaps. So let's continue on with this exercise. Now that we have a better understanding of these 2 sectors, we understand the common risk profiles and typologies of how businesses can be exploited. Let's talk about what to do about it by way of implementing mitigating measures. So firstly, like financial institutions, applying enhanced due diligence for high-risk clients would be an expectation. Additional identity verification steps, of course, especially for non-face-to-face interactions. The collection of supplementary information, as I mentioned in my last example, to address potential source of funds, transaction purposes, and leveraging publicly available information, which is key. And leveraging transaction monitoring systems to detect, again, structuring activity, use of shell companies, transactions involving high-risk jurisdictions, and unusual patterns relevant to specific businesses, such as rapid flipping of properties, irrational transaction volumes or values, or digital currency use in casinos and real estate transactions. Some other suggestions would be implementing risk assessments for intermediaries such as brokers, lawyers, or agents as a means to restrict anonymity and third-party involvement. And conducting regular AML training, of course, for staff across operational and compliance roles. That's fairly universal, but it's a practical application here. And lastly, periodically reassessing client and business relationship risks based on behavioral changes or emerging risk factors is a final practical suggestion on how to consume the NRA and put it into practice. So, for casino and real estate sectors, these aren't just, again, theoretical risks. The NRA outlines clear typologies like chip buy-ins with minimal play or layered ownership in property deals that can help your business identify suspicions and strengthen your controls. So I'm going to wrap up with the last slide. I just want to be clear, it's important to remember that the NRA does not suggest that any sector is inherently complicit in money laundering or terrorist financing. Instead, it acknowledges that Canada's financial and professional services, because of their strength, their accessibility, and global reach, can be leveraged by bad actors if not properly safeguarded. So your business services are vital to Canada's economy and society. The NRA simply helps you understand where vulnerabilities may exist so they can aptly apply appropriate mitigation measures. Being risk informed doesn't mean being at fault. It means being prepared. So a well-developed risk assessment is a foundational element of an effective AML and ATF compliance program. While there's no standardized methodology, we emphasize that businesses, the regulated sector, should tailor the risk assessment to really reflect the realities of their business. Risk assessment, my last point, and I said it throughout, it's not a one and done thing. You've got to keep it current, document your thinking, and check regularly if your controls are actually working. So bringing the NRA to life is not just about compliance, it's about impact. When we act on shared risk insights, we together as an economy, we make Canada safer, both for our people and for our economic resilience. So with that, I think we're on time. I'll hand it back over to Geneviève. Merci bien.
Thank you, Ryan. Thank you, colleagues from finance, and Yulia as well. So we do have some questions actually on the National Risk Assessment and its application as well too. So we're going to take the 7 minutes that we have left before we jump to the next topic. The first question is for our colleagues from the Department of Finance. Can you please provide additional details on how the 2025 National Risk Assessment has changed relative to previous National Risk Assessments and how this strengthened the report? Over to you.
Thank you, Jen. So, as I mentioned at the very beginning of our presentation, the 2025 National Risk Assessment includes some important enhancement that in the methodology to improve the report overall usefulness and to obtain a more comprehensive picture of Canada's money laundering, terrorist financing risk landscape. So on the threat assessment, the ratings were consolidated to a lower number of overall threat. However, this does not compromise the underlying quality of the assessment. We still maintain the same level of rigor and the analysis behind the scene. The methodology for assessing and rating money laundering threat was recalibrated to reduce the overlap between the rating criteria. We place more emphasis on the criteria on a proceed of crime to have a more realistic and reflective picture of the threat materiality. So this would help guide priority setting and resource allocation. For key threat actors, third-party professional money launderers, organized crime groups are distinguished and discussed separately in the 2025 Risk Assessment Report. This reflects the sophistication of organized crime groups, which operate through interconnected networks, and they have access to advanced technology to help criminals launder the proceeds of crime. The third-party money launderers, professional money launderers are not directly involved in committing the predicate offenses, but they have the characteristics and the access to typology technology that pose a very unique threat to the Canadian financial system. Therefore, we dedicated a separate discussion of them in the report. For terrorist financing assessment, the 2025 report focuses on a smaller number of terrorist financing actors with direct nexus to Canada, highlighting those that are most active in raising and moving funds through Canada and the Canadian financial system. For the assessment of inherent vulnerabilities, the 2025 NRA has been expanded to include a list of the mitigation measures that include legislative regulatory requirements in places that the federal and provincial levels, the supervisory approach applied to each sector, law enforcement responses to mitigate the threat and vulnerability of the sector, and especially the private sector compliance effort to comply with AML, ATF obligation and to mitigate risk in their respective sector. Among other things, the 2025 National Risk Assessment can be considered to be the most consulted national risk assessment we have. We consulted broadly with federal organizations, provincial, territorial governments, industry association, businesses, representatives from the nonprofit sector. We took into consideration feedback and recommendation that gathered through various public consultation forums and guidance from international best practices. And of course, the Department of Finance and are committed to hearing more feedback from the private sector and subject matter experts so that we can continue to improve the methodology and the process of the NRA. Thank you.
Thank you. Next question is for our FINTRAC colleague. I think, Ryan, this is for you. How should an MSB reflect the requirement of a ministerial directive in its written risk assessment and compliance program to show that the risk has been identified and controlled?
Well, thanks very much. It goes back to, I'll just be brief because I'm just paying attention to the time. Policies and procedures, your risk assessment, all has to be monitored and updated accordingly. A ministerial directive that is issued, reporting entities have an obligation to pay attention to the broader environment and understand that when a ministerial directive is published, that they have an obligation to incorporate that into their risk-based approach. So I would say that it needs to be consumed, and the direction in the ministerial directive needs to be incorporated into their risk-based approach and policies and procedures at that moment in time and reviewed periodically moving forward. Thanks.
Excellent. Thank you, Ryan. We do have two more questions. I know that we're at time for this session, but I think that the national risk assessment is very important, and we should dive into the question. They're super relevant. So we will take the two last one and then move on to the next session. So next one is for the Department of Finance. Can you elaborate why mortgage lenders are deemed to be high vulnerability while mortgage brokers are medium? So both deal with the same borrowers. So please explain. Thank you.
Hi, thanks, Jen. Yeah, I would like to elaborate further on the information that is provided in the National Risk Assessment to answer your question. So, as you know, for each sector, when we assess the vulnerability, a lot of different criteria go into the analysis that eventually lead to the final rating of a sector or the subcategory that fall within a bigger umbrella sector. So we look at inherent characteristic of the industry, the nature of product and services, nature of client-business relationship, geographic reach, exposure to high-risk clients, nature of delivery channels, etc. So for mortgage for mortgage brokers, I'll start with those first. They are traditionally the professionals, intermediary that provide different mortgage options to their clients, and they handle the application of the chosen mortgage option with the mortgage lender. The sector is assessed not to be overly complex, and in most cases, brokers do not handle the funds directly from borrowers. So this impact the criterion of the nature of client-business relationship, whether or not they have exposure to the funds from the borrowers. Mortgage lenders, on the other hand, this sector can be complex in terms of financing arrangements and their business operation. Ownership structure of some type of private lenders or entities that providing them with the capital can also be highly complex and opaque. Some private lenders promote their services to individuals who are likely to work in vulnerable businesses, for example, those that are cash intensive. Additionally, certain segments of the sector are more likely to deal with corporate entities as borrowing clients or high net worth individuals as the providers of the capital. So some of the differences in the characteristic in their operation, the clients or the providers of the funding that they deal with would definitely impact why they have different ratings. Thank you.
Thank you so much for this response. Last question going to our FINTRAC colleagues. I think this one is also for you, Ryan. Does FINTRAC expect MSBs to directly reference the National Risk Assessment or the Department of Finance Money Laundering Terrorist Financing Risk Assessment when identifying tree-related risk, such as iron? Over to you.
Jen, you broke up a little bit. Could you just repeat the last part of the question?
Of course. I'll repeat it completely just in case I broke up in the first instance for folks. So does FINTRAC expect MSBs to directly reference the National Risk Assessment or the National Money Laundering and Terrorism Financing Risk Assessment when identifying country-related risk, such as iron?
Well, I would say FINTRAC expects MSBs and other reporting entities to consider the NRA when identifying country-related risks that include jurisdictions like Iran, but not necessarily to cite it directly in their compliance documentation. But there is an expectation that they need to demonstrate that they've consumed that information. The NRA does identify high-risk jurisdictions, for example, Iran, Syria, Lebanon, Somalia, as destinations or origins for funds linked to money laundering and terrorist financing. So, FINTRAC has guidance as well that encourages reporting entities to integrate national risk context into their own risk assessments, including geographic risk indicators. That's part of our guidance. So while direct citation of the NRA is not mandatory, using its information is mandatory, is required to help reporting entities demonstrate a credible risk-based approach that aligns with the NRA and the compliance expectations of FINTRAC. Thanks.
Thank you, Ryan, for clarifying this expectation. So with this, we're going to close the National Risk Assessment segment of our Industry Day. I think we can summarize it as understanding our risk exposure is a critical foundation for how we respond to these risks. Going back to what the director mentioned at the beginning, it's a we thing, it's not a long thing, and we need to be careful about the interconnectedness, but also the risk and the mitigant we can put in place to fight financial crime together. Building on that, we'll now hear from Tina Matos, our Chief Compliance Officer at FINTRAC, who will present our new risk and supervisory frameworks designed to modernize our approach and strengthen our collective ability to detect, prevent, and deter AML and ATF and sanction evasion. Thank you. Over to you, Tina.
Merci beaucoup, Geneviève. Good afternoon, everyone. Bonjour à toutes et à tous. Thank you for being here today. I'd like to echo my director's words this morning. We're all in this together in terms of the fight against money laundering, terrorist financing, and sanctions evasion. We can't do it without our reporting entities, so I'm very pleased to be here today. Your presence here reflects that shared commitment to strengthening Canada's economy against financial crime, and I'm grateful to have this opportunity with you here today, and I'm so pleased that so many have come to listen to us. Aujourd'hui, j'ai le plaisir de vous présenter un aperçu du nouveau cadre de gestion des risques et du cadre de surveillance du CNAF. During this session, I will be pleased to share an overview of FINTRAC's new risk framework and supervisory framework to explain to you how we are guiding the work that we do with you. These new frameworks reflect our ongoing efforts to modernize and strengthen our approach to combating money laundering, terrorist financing, and sanctions evasion. Let me start with where we are today. And Liam, I think we would probably switch slides here, but I'll leave it with you. The AML ATF landscape is evolving rapidly. We are all working within complex developments like virtual currencies, emerging sectors, and new threats such as fentanyl. To stay ahead of these developments, FINTRAC has undertaken a major transformation of our supervision sector. This includes restructuring our teams, refining our strategies, and modernizing our tools to better reflect the realities of today's financial ecosystem. Cette transformation s'appuie sur plus de 25 ans d'expérience, tout consistant avec meilleures pratiques internationales. This transformation required significant updates to our framework, aligning with international best practices and leveraging our 25 years of experience here at FINTRAC as a regulator. So as you can see on the slide here, the risk framework is a cornerstone of FINTRAC's approach, and it provides us with a structured methodology to assess and mitigate risks. And that's what we've been talking about this afternoon in terms of the national risk assessment. Together, our risk framework, along with our supervisory framework, which I'll speak about momentarily, ensures that our activities are proactive, efficient, and aligned with our strategic priorities. One of the most important aspects of our risk framework is the risk-based approach for decision-making. This framework provides clarity for us on the key steps in the risk management process, including identification, measurement, assessment, and monitoring of risk. The framework also highlights key tools for identifying and tracking risks within the sector. This includes structured risk documentation requests to gain a clearer picture for us of the most pressing risks we need to be looking at. We've also integrated new categories, as you can see on the slide, including new risk categories, including operational risks, strategic risks, and reputational risks. These categories allow us a more systematic approach to risk management. I'll briefly describe these risk categories for you. First, operational risks include risks related to people, technology, and processes. This category covers modeling risk systems, data risk, and culture capacity. Next, strategic risks involve the impact of not selecting the right strategy or failing to execute the identified strategy. The framework documents ways to identify and track these risks. And finally, reputational risks. These pertain to potential damage to the reputation of our supervision sector, loss of credibility, or failure to fulfill regulatory mandates. We will be systematically assessing this risk at the sector level as we move forward with our own mandate. We will continue using this framework to monitor supervisory risks, ensuring a comprehensive risk assessment of the reporting entities under our oversight. Through ongoing risk analysis, advanced analytics, and results tracking, we continuously refine our approach, as you do, strengthening our ability to assess and manage emerging risks effectively. Next slide, please. Here we have a snapshot of our revised or new supervisory framework. So our supervisory framework is our comprehensive guide that aligns FINTRAC's supervisory activities with our mandate. Our new framework is dynamic and adaptable, designed to respond to the rapid changes of the digital age that we're in today. It's built on three core components: guiding principles, the risk framework, which I've already gone over, and the pillars of supervision. Let me start with our guiding principles. Our supervisory culture is shaped by four guiding principles. One is risk-based, as we've been talking about risk all day. Resources are allocated using our framework proportionally to the level of risk and complexity presented by reporting entities. Early intervention. We want to identify issues early and address them early in a timely manner to prevent escalation. Transparency. We want to provide clarity and predictability for reporting entities through guidance and engagement. And then lastly, forward-looking. Our approach works to anticipate emerging risks and evolve with the evolving financial ecosystem. Ces principes guident tous nos activités de surveillance et nous permettent de bâtir une culture de conformité fondée sur la collaboration, la clarté et l'amélioration continue. Let me get into as well the supervisory pillars next. So our supervisory framework is operationalized through 3 interconnected pillars, which my director spoke to briefly this morning as well. Monitoring is the cornerstone of our supervisory activities, focused on assessing compliance. We use, as I said, a risk-based approach, tailoring the intensity of our monitoring activities to the risk profile of each reporting entity. Some of our monitoring tools include examinations, which may be targeted or full scope, and can assess both the technical soundness and effectiveness of compliance programs. Action plans, which we can use to address deficiencies and ensure corrective measures are implemented. As well, mandatory reporting reviews to assess the quality and timeliness of submissions. So the first pillar, monitor. The second pillar I can speak to is enforce. While we, as the regulator, remain committed to supporting compliance, we are taking a firmer stance at the same time on non-compliance. Serious or repeated deficiencies can lead to consequences, with enforcement decisions guided by factors such as compliance history, corrective actions, and harm caused. Notre objectif n'est pas de punir, mais de protéger l'intégrité du système financier canadien. Enforcement is a tool to ensure accountability and drive meaningful change. Lastly, on the engage pillar, as my director also noted, we're shifting to more targeted engagement, focusing on sector-specific guidance, tailored webinars, and direct conversations with higher risk industries. Transparency and dialogue will remain central to our approach. Bottom line, the risk framework and the supervisory framework are deeply interconnected. By embedding risk management into all our supervisory activities, we ensure that our resources are focused where they are needed most. This integration allows us to identify and address risks early, allocate resources efficiently, maintain alignment with international standards and best practices, and underlines our commitment to continuous improvement. We at FINTRAC recognize that the financial ecosystem is constantly evolving. The supervisory framework is dynamic and will continue to adapt to emerging risks, new technologies, and changes in the regulatory landscape. We have it published on our website, and we will publish changes as they evolve over time. So, at the end of the day, our commitment to transparency, collaboration, and innovation remains the heart of our approach. We will continue publishing penalties, sharing risk methodologies, and providing clear enforcement guidance on our website. Our aim is to be a fair, predictable, and risk-based regulator. Next slide, please. So in closing, FINTRAC's new risk and supervisory frameworks are designed to address the challenges today while preparing for the future. We are committed to working with you, continuing to work with you to strengthen Canada's defenses against money laundering, terrorist financing, and sanctions evasion. I want to thank you again for being here today and for your continued partnership in protecting the integrity of our financial system. You are all equally important in this quest that we have. Merci encore pour votre présence et votre engagement envers la conformité. J'ai hâte de poursuivre cette collaboration avec vous. Et avec ça, je vais tourner à Geneviève to continue the session. Merci beaucoup.
Merci beaucoup, Tina. Thank you so much, Tina, for this overview of our new risk and supervisory framework. This is certainly a lot of effort that we put together, and we're pretty proud to have published this on our website. If you have any questions, please reach out to us. This is a significant shift, but as always, we implement as we go. So we would like to hear your feedback. Always interesting to explain how we work internally as a regulator as well too. And thank you for that. So one thing I wanted to remind everyone is that we will share the slides communicated today in both languages after the industry day. And also please continue to use the question function as we go. So now I will turn it over to Philippe Pellerin, manager of FINTRAC Strategic Works and Tactic Unit, who will present on FINTRAC Industry Reviews, which is a new tool that will be implemented as part of the FINTRAC new risk and supervisory framework. Thank you, and over to you, Philippe.
Bonjour, merci Geneviève, merci Tina. Good afternoon, everyone. Bonjour à tous. My name is Philippe Pellerin, manager responsible to launch FINTRAC's Industry Review program. Very excited. It's a real pleasure to be here with you today to have this opportunity to introduce a new supervisory tool at FINTRAC that we'll be implementing in the near future. This initiative marks an important step forward in how we engage with reporting entities and support compliance across Canada's anti-money laundering and anti-terrorist financing regime. Now, for many of you, the concept of industry reviews may already be familiar, especially if you work with other financial regulators. However, given the diversity of sectors and business models under FINTRAC's purview, from financial institutions to real estate, dealers in precious metals and stones, and money service businesses, this new tool represents an opportunity to enhance our understanding across all sectors while tailoring an approach to supervision that reflects the unique nature of our regulatory landscape. Although brief, today's session is a valuable opportunity to learn more about this tool, with our primary objective to provide clarity and foster a shared understanding of how this initiative will enhance transparency, support compliance, and ultimately strengthen Canada's AML/ATF program. La séance d'aujourd'hui est une excellente occasion d'en apprendre davantage sur cet outil, un outil qui a pour but ultime de contribuer à renforcer la transparence, à appuyer la conformité et à solidifier notre régime de la lutte contre le blanchiment d'argent et le financement terroriste. En espérant que cette séance sera informative, nous vous invitons à partager vos commentaires et poser vos questions. I'll be doing my presentation mostly in English, but we do look forward to your questions, your insight, your feedback in the official language of your choice as we continue to evolve our supervisory practices in collaboration with the sector regularly. Next slide, please. With the time we have today, I'll be providing a high-level overview of what industry reviews are, so the type of outcomes can result from them, and most importantly, what your role is as regulated entities when selected to participate. Aujourd'hui, je vais vous présenter les grandes lignes de cet outil, ce que c'est un examen de secteur, les résultats possibles qui peuvent en découler, et évidemment votre rôle en tant qu'entité déclarante lorsque vous êtes sélectionné pour y participer. We'll also touch on what FINTRAC expects from entities during the process, how you can best prepare to meet those expectations. The goal here is to ensure that you leave today with a clear understanding of how this tool works and how it may apply to your organization. So, next slide, please. Let's jump into it. So, industry review is a common tool used by a regulator across the globe to take a broader look at how well current legislation is working in practice. They help identify areas where improvements may be needed and ensure that the regulatory requirement continue to reflect the realities of a changing business environment and the evolving need of the public. At FINTRAC, industry reviews fall under the engagement pillar as part of our new supervision framework just presented by Tina. What this means is that the reviews will serve not only as a way to assess compliance, but also a means to communicate our expectations more clearly and to foster constructive dialogue with you, the reporting entities. Now, ultimately, we believe that these reviews will support our mandate by helping to strengthen compliance, clarify regulatory expectations, and generate actionable financial intelligence on specific issues that matter to Canada's AML and ATF efforts. To support, the purpose of FINTRAC Industry Review is to provide a broad overview of key issues, trends, vulnerabilities, industry best practices, and risks within one or more reporting sectors. They are designed to give us a clearer picture of what's happening across the industry, helping us understand how businesses are managing their obligations and responding to emerging challenges. Through these reviews, we're able to gather valuable insights directly from reporting entities, whether it's about specific risks, the controls in place to mitigate them, how legislative requirements are being implemented, or broader issues affecting the financial ecosystem. Now, more specifically, through a detailed information request and the conduct of interviews, industry reviews will allow us to, one, assess current or emerging trends and issues related to a particular topic or theme, examine industry practices that fall within FINTRAC's mandate as a whole, evaluate how well reporting entities are meeting their legislative obligations, and lastly, identify areas where additional regulatory guidance or requirements may be needed. Ultimately, these reviews are about strengthening our understanding of the sectors we regulate, enhancing our supervisory approach, and ensuring that our efforts remain aligned with the realities of the marketplace and the needs of Canadians that we know keeps changing and evolving. Next slide, please. Now that we've covered the purpose of industry reviews and how they help us better understand the sectors we regulate, let's take a closer look at what these reviews can lead in terms of outcomes. And I know that many of you here are all very interested to know as to what that looks like. By engaging with reporting entities this way and analyzing the information collected, FINTRAC will be able to identify tangible outcomes that support both regulatory effectiveness and sector-wide improvements. Now, these outcomes will not only inform our supervisory approach, like I said, but also shape how future guidance, policy development, and hopefully our understanding of emerging risk. As part of the industry review process, FINTRAC may look at a range of outcomes depending on the findings and observations made during the review. But it's really important that I focus on the following two outcomes, as they will always be part of the standard process of industry reviews. So first, let's talk about supervisory observation letters. Now, if your organization was fortunate enough to be selected by FINTRAC to participate in industry review, bravo, you will receive a supervisory observation letter at the conclusion of the process. Now, this letter will outline key findings, including areas for improvements and an example of best practices observed during the review, either within your organization or across the sector that was reviewed. We encourage you to use this feedback as an opportunity to assess your compliance program, address any identified gaps or vulnerabilities, and ensure that your internal controls and governance frameworks are robust enough to detect, escalate, and report suspicious transactions related to the specific theme under the review. Now, I know that's a question on top of mind for a lot of people, but it's very important to know that in cases where the review identifies significant concern or instances of non-compliance, as a regulator, we do have a responsibility. And if it impacts the integrity of Canada's AML and ATF regime, FINTRAC may consider additional supervisory measures or enforcement actions as appropriate. So, in addition to the individual feedback that I mentioned, FINTRAC will aim to publish a consolidated industry review report focused on the selected theme of the review. This report will share sector-wide observation, including common trends, challenges, and best practices. It will also outline FINTRAC's expectation on how reporting entities should address the risks and vulnerabilities identified during the review. Ultimately, the goal of this report is to support all reporting entities, whether or not they participated directly in the review, by providing practical insights and guidance that can be used to strengthen your own compliance programs and enhance risk management practices across the industry. Next slide, please. With those potential outcomes in mind, it's important to take a moment to talk about what this means for you as a reporting entity. Participating in an industry review isn't just about receiving feedback. It's also about the opportunity of demonstrating your organization's commitment to compliance and to take meaningful steps towards strengthening your AML ATF program. So let me conclude on the role of reporting entities in this process and what FINTRAC expects from your organization when selected to take part of these reviews. First and foremost, we are looking for strong collaboration. Your organization may be selected to participate in a FINTRAC cross-sector industry review focused on a very specific theme. If selected, FINTRAC will notify you directly and will provide detail about the scope and expectation of the review. Of course, we will provide sufficient and reasonable amount of time for you to get ready. Participation in an industry review is an important supervisory activity, and we expect the same level of cooperation and responsiveness as you would provide during a formal examination. This includes submitting requested documentation and information in a complete, accurate, and timely manner, as well as making key individuals within your organization available for in-person or virtual interviews. Now, your engagement in this process is essential, not only to help FINTRAC gain a clear understanding of sector-wide practices and risks, but also to ensure your organization is well positioned to assess and strengthen its own compliance program. The review is an opportunity to reflect on your current controls, identify any gaps, and take proactive steps to enhance your ability, like I said, to detect and report suspicious activity related to thematic focus. As I mentioned earlier, FINTRAC will publish an industry review report summarizing the key findings of the selected focus thematic. This report will highlight sector-wide trends, common vulnerabilities, and best practices, while also outlining FINTRAC's expectation for how reporting entities should address these identified risks. Following the release of this report, we encourage all reporting entities, regardless of if they participate or not, to take a closer look, like I said, at their compliance program. Use the insight provided to assess your own controls, the gaps, make necessary adjustments to ensure your organization is well equipped to do what you have to do in terms of the legislation. Now, by taking these steps, you not only align with regulatory expectations, but you also contribute meaningfully to the strength and resilience of Canada's AML/ATF regime. Lastly, your organization also has an important role to play in reinforcing compliance internally. So after reviewing the findings in the industry review report, we encourage you to reflect on how the insight applied to your operation and consider whether any updates or enhancements to your compliance programs are needed. Now, these could include reviewing internal procedures, refreshing staff training, strengthening controls related to the specific thematic. But one thing is for sure, by implementing these concrete measures, you contribute to a more consistent and resilient approach to compliance. You build a stronger compliance culture within your organization. Before I leave you in the capable hands of my colleague, Julie Leclerc, I leave you with these takeaways. So 1, being chosen for an industry review is not a bad thing. Actually, you should see it as an opportunity to improve your compliance program. 2, help us help you. Meaning, be clear and concise in your response to our information requests. The easier it is for us to find information, the less of a burden will be on you. And 3, collaborate and cooperate when the regulator comes for a visit. That usually means for a short stay. So with that, I will hand it back over to our moderator, Geneviève, and be happy to answer any questions if there's any. Thank you and have a great rest of the day.
Thank you, Philippe, for this excellent presentation. We do have some questions, and I think we will alternate between you and me, Philippe, on the question. So the first one is really in relation to other tools we have in the supervisory framework versus the industry review. So the question is how the industry review is different from like annual monitoring meetings or monitoring meetings on its own. Versus self-attestation versus risk questionnaire. Phil, would you like to start on this one?
If you wish. So industry review, like I said, is cross-sectoral review. So we will select a group of REs with a very specific topic. We go and assess the level of compliance. Not there first and foremost to find non-compliance, although they may come out during a review, but it's really to assess your level of how you're meeting the legislative obligations and to find best practices to be able to share throughout the industry. So it's a tool that gives us a lens horizontally across multiple REs and multiple sectors versus more targeted or individual supervisory activities that regulators like FINTRAC are used to doing.
And I would add to that, it's really thematic, so we would use a theme that is important for the government of Canada as well. To just linking back to the national risk assessment, like we heard of high and very high risk vulnerabilities and cross-border risk, for example, or organizational structure that are complex in relation to beneficial ownership. Like that could be themes that we use, and we select, I don't know, 20 or 40 reporting entities depending on the scope. And then at the end, we will have a report. In terms of outcome, we do have a question in relation to that. So could these lead to FINTRAC discussions with government to make legislative and regulatory changes, either enhancement or streamlining of requirements no longer needed? So I'll answer this one. The objective of the industry review, like Philippe mentioned, are to look at best practices and also bring up those best practices so other regulated entities can be aware of them. Of course, we will also identify gaps, and the individual entities will be aware of that and will be able to address that. But also important, yes, these could be evidence-based policy elements that we can provide to the Department of Finance to show gaps, to show changes required, to show also how we should implement. I would also add not just legislative or regulatory changes, but also how it could inform our guidance as well too. So we do see this tool as being an informative tool for many outcomes that are not simply just focused on the individual reporting entities that would be part of the industry review. Phil, did you want to add anything to that?
I think that covers it all. Thank you, Jen.
Okay, perfect. So then the other question was around other regulators have had a very long lag in publishing the final industry report after similar industry reviews, which can lead to feedback that is still outdated when published. What is the timeline FINTRAC is looking at for these reviews? So at the beginning, when we scope in the industry review and when we invite the regulated entities, the timeline will be clear. And the scope of the final reports, the high-level scope, I would say, will be clear as well too. So yes, we are aware that this is lessons learned. We do work with other regulators, and we will try to embed these lessons learned as we build it. Last question, how much notice will be given for a surprise industry review? How formal or informal will it be? Philippe, I will pass it over to you on this one.
So, I think the advance notice will be made very clear to participants by default, mostly, depending again on the scope of the review and the documentation request. We'll be using definitely a reasonable approach here in terms of information requests, and you'll have sufficient heads up to know that it's coming. Usually our default is a 30-day turnaround to provide information. But again, I think FINTRAC is somewhat of it's a reasonable regulator that can accommodate, but our default process for information requests is 30 days, and we would look at what's feasible for extension if it's warranted.
Thank you, Philippe, for this. We have no more questions. With this, I will turn it over to Gilles Leclerc, our Executive Manager of FINTRAC's Methodology Unit, to revisit some key guidance reminders on beneficial ownership and STR timing. Over to you, Gilles.
Merci Geneviève. Donc, bonjour à tous. Mon nom est Gilles Leclerc. Je suis gestionnaire exécutive pour l'unité de méthodologie en surveillance. So similar to my colleague Philippe, aujourd'hui la présentation se fera majoritairement en anglais, mais évidemment vous êtes invités à donner la rétroaction ou à poser des questions dans la langue de votre choix. So as Jen mentioned, today I will provide an overview of current requirements and highlight changes to the guidance on beneficial ownership requirements. Updates include the incorporation of new requirements for reporting entities, to consult Corporation Canada's database, and to submit beneficial ownership discrepancy reports. So if we move to the next slide. So why is beneficial ownership important? Beneficial ownership requirements under the PCML TFA and associated regulations are a cornerstone of Canada's anti-money laundering and anti-terrorist financing regime. By aligning its beneficial ownership efforts with recommendations 24 and 25 of the FATF, Canada continues to demonstrate its commitment to global anti-money laundering and counter-terrorism financing standards. Beneficial ownership requirements also support know your client obligations by identifying individuals who ultimately own or control entities. These measures remove anonymity in financial transactions, ensuring greater transparency and preventing the misuse of our financial system for illicit activities. When reporting entities collect and verify beneficial ownership information, they also play a critical role in mitigating money laundering and terrorist financing risks, while helping to protect the integrity of Canada's financial system. Next slide, please. So who are the beneficial owners? Beneficial owners are individuals who either directly or indirectly own or control 25% or more of an entity. In the case of a trust, they are the trustees, the known beneficiaries, and the settlers of the trust. If the trust is a widely held trust or a publicly traded trust, they are the trustees and all persons who own or control, directly or indirectly, 25% or more of the units of the trust. It's important to remember that beneficial owners must always be individuals. They cannot be other corporations, trusts, or entities. In terms of the requirements now, so beneficial ownership requirements apply to all reporting entities except title insurers. To meet beneficial ownership requirements, reporting entities must obtain beneficial ownership information when verifying the identity of an entity under the PCML TFR. This includes corporations, trusts, and partnerships. Once the beneficial ownership information is collected, you must take reasonable measures to confirm its accuracy when you first obtain it and during ongoing monitoring of your business relationships. Reporting entities must also meet record-keeping requirements in relation to beneficial ownership information. You must keep records of the beneficial ownership information you have obtained and the measures you have taken to confirm the accuracy of the information. The records must be kept for 5 years from the date of the last transaction is conducted. If we look at the reasonable measures to confirm accuracy now, reporting entities must take reasonable measures when confirming the accuracy of the information obtained. In terms of reasonable measures, it could include reviewing official documents such as article of incorporations, trustees. You can also conduct open source searches or use commercially available information, having the client sign a document confirming the accuracy of the information, which is known also as the attestation method. Moving on to the next slide. The type of information for reporting entities must obtain will vary depending on the nature of the entity. For example, when reporting entities verify the identity of a corporation, they must obtain the names of all directors and names and addresses of all individuals who directly or indirectly own or control 25% or more of shares of the corporation. For trusts, reporting entities must obtain the names and addresses of all trustees, known beneficiaries, and settlers of the trust. For a widely held trust or a publicly traded trust, reporting entities must obtain the name of all trustees of the trust and the names and addresses of all persons who directly or indirectly own or control 25% or more of the units of the trust. For entities that are not corporations or trusts, reporting entities must obtain the names and addresses of all individuals who directly or indirectly own or control 25% or more of the entity. It is important to note that in all cases, you must obtain information establishing the ownership, control, and structure of the entity. I also want to mention that an effective compliance program includes evaluating relationship-based risk indicators, such as beneficial ownership information, to identify and mitigate risks associated with money laundering and terrorist financing. It also involves assessing beneficial ownership-related risks as part of the overall risk assessment process. Moving on to the next slide. If reporting entities are unable to obtain the beneficial ownership information or to confirm its accuracy when it is first obtained or during the course of ongoing monitoring, then they must take reasonable measures to verify the identity of the entity's chief executive officer or of the person who performs that function, and apply special measures for high-risk clients, including enhanced ongoing monitoring. Next slide. Both provincial and federal corporate registries have been available to reporting entities to consult corporate and beneficial ownership information. Since October 1st, 2025, reporting entities are required to consult Corporations Canada's database when taking reasonable measures to confirm the beneficial ownership information they obtain on corporations incorporated under the Canada Business Corporations Act that have been assessed as high risk for money laundering or terrorist activity financing offenses. Corporations Canada's database provides information on individuals with significant control over these corporations, which reporting entities can use to verify the beneficial ownership information they have obtained on high-risk assessed corporations under the Canada Business Corporations Act. Moving on. On the discrepancy report and record keeping now. If a reporting entity identifies a material discrepancy between the beneficial ownership information they've obtained and the individuals with significant control listed in Corporation Canada's database, they are required to report the discrepancy and keep records. Reporting entities are required to report the discrepancy to Corporations Canada within 30 days after the day on which the discrepancy is identified, unless they can resolve the discrepancy within 30 days. Reporting entities will also be required to keep a copy of the notice of acknowledgement they received from Corporations Canada for submitting the beneficial ownership discrepancy report. Discrepancy reporting will encourage federally incorporated entities to keep the registry information up to date and inform Corporations Canada of potential errors or inconsistencies. Corporations Canada can then follow up directly with the corporation to verify and correct any discrepancies on the individuals with significant control listed in their database. It's important to note that not all differences qualify as a material discrepancy. For example, minor issues like spelling mistakes, slight variations in a name or address, or the use of a service address in Corporations Canada's database instead of a residential address do not constitute material discrepancies. Both FINTRAC and Corporations Canada are committed to providing clear and practical guidance to help reporting entities and stakeholders meet their obligations. Corporations Canada has published guidance on their website on submitting a beneficial ownership discrepancy report, and FINTRAC has updated its existing beneficial ownership guidance to incorporate new beneficial ownership requirements under the Act and regulations. I will now briefly touch on the suspicious transaction reporting as another reminder. So we want to highlight the critical role that suspicious transaction reports, or STRs, play in Canada's efforts to combat money laundering, terrorist financing, and sanctions evasion. The suspicious transaction report is one of the most valuable and unique report types submitted to FINTRAC. What makes STRs unique is that there is no minimum monetary threshold for reporting. This means you are required to submit reports for both completed and attempted transactions, regardless of the amount. In addition to the prescribed information, STRs allow you to expand the descriptive details surrounding a transaction that is derived from your assessment of what you are seeing through your business interactions and activities. As reporting entities under the PCML-TFA, you are required to report any completed or attempted transactions where there are reasonable grounds to suspect a connection to money laundering, terrorist financing, or sanctions evasion. Reasonable grounds to suspect is the required threshold to submit an STR to FINTRAC, and it is a step above simple suspicion, meaning that there is a possibility that a money laundering, terrorist activity financing, or sanctions evasion offense has occurred. You do not have to verify the facts, context, or indicators that led to your suspicion, nor do you have to prove that such an offense has occurred in order to reach this threshold. Your suspicion must be reasonable and therefore not biased or prejudiced. When submitting an STR, you must include detailed reasons for your suspicion. This could include factors such as nicknames, beneficiaries, geographic locations, relationships, and other background information that supports your assessment. As I said, STRs are a key tool for FINTRAC. They provide the foundation for financial intelligence disclosures, which help law enforcement and national security agencies identify and disrupt criminal networks. A single disclosure can contain information derived from thousands of financial transaction reports and represent millions of dollars in suspicious activity. By submitting STRs, you are not only complying with your legal obligations, but also playing a critical role in protecting Canada's financial system and economy. I want to end on the timing and best practices, if we can move to the next slide. So, again, under the law, you are required to submit STRs as soon as practicable. This means the submission should be done as quickly as possible after you have completed measures that enable you to establish that there are reasonable grounds to suspect that the transaction or attempted transaction is related to the commission of a money laundering, terrorist activity financing, or sanctions evasion offense. In situations where time-sensitive information is involved, such as suspected terrorist financing or threats to national security, you should expedite the submission of your STR. One key point to remember is confidentiality. You are strictly prohibited from informing anyone, including the client, about the contents of an STR or even the fact that you've submitted one. This applies not only to completed reports, but also to ongoing or pending assessments. When preparing your STR, aim for clarity and precision. Use clear, concise language and avoid internal jargon or acronyms that might not be understood by others. Ensure your report includes all the factors that raise your suspicion. For example, unusual or complex transactions, dealings with sanctioned entities, questionable sources of funds, atypical customer behavior, or unclear or overly complex business ownership structures. These details are critical for FINTRAC's analysis and for producing meaningful financial intelligence disclosures. Donc, ça s'arrête ici pour moi. For additional guidance, including examples of suspicious indicators, et puis également pour les bénéficiaires effectifs, on vous invite à consulter notre site internet à fintrac-canaf.canada.ca. Donc, merci beaucoup. Sur ce, je retourne le tout à Geneviève.
Merci Julie, je pense que tu vas rester avec moi un petit peu parce qu'on a quelques questions pour toi. Donc, so first question that we have. Can you hear me well, Julie?
Oui.
Yeah, parfait. Okay. Does the October 1st reporting requirement extend to corporations incorporated under Canada's Not-for-Profit Act as well?
So there are only two corporations. There's no need to resolve the material, the non-profit. So it's only for corporations, sorry.
Thank you. Second question. We use beneficial ownership form for the client to sign and attesting to their beneficial ownership. However, we do not use it if the ownership percentage is shown on our corporate search or current registration statement. Is that acceptable?
Can you, sorry, I have to process the information. So if you use the attestation to obtain the beneficial ownership information, and you would use an additional method to confirm the accuracy. So if you're using the attestation to confirm, there's no need to record the percentage.
Thank you. Other question. Are regulated entity expected to take action to resolve material discrepancies with the entity?
No, there is no expectation to resolve the material discrepancy.
So there is another question that uses real estate transaction, but I think the question is more globally. If you have, like, for example, a lawyer or like an intermediate that is verifying the beneficial ownership for you, is that acceptable? So it comes to you do use intermediaries to do business services. Can you subcontract your obligation, your compliance obligation as well too? Okay, so I'll read you the scenario, and if you want us to take it away and come back, we could. In a real estate transaction, it is sufficient for the mortgage lenders to rely on their lawyers to verify the information. So technically, usually in this sector, they normally do this as part of the real estate transaction.
Yes, so we'll take it back, Jen, and I'll take this opportunity just to say that any feedback that we receive will be used to clarify or enhance current guidance, and so what has not been addressed here will be taken for consideration.
Excellent. Thank you, Julie. Last question. Anywhere else that they can find more information on beneficial ownership or STR timing? So what are the key guidance, I guess, you can point folks to on our website?
It's really on our website. So there is in your, I'm going by memory, but know your customer, that's where you would find the information on beneficial ownership, including for beneficial ownership discrepancy report. STR as well, you have the STR guidance that is well on the website. And I would encourage people to go see in subsections because, for instance, the STR guidance has a link to more specific guidance on STRs linked to sanctions evasion. So there is a benefit to explore and click on links so that you have access to the fulsome guidance. There's also some videos that are posted. I want to say on our YouTube channel, and so STR videos explains reasonable grounds to suspect, the steps, what to include, and so again, using that as a way to get familiar with obligations is available as well.
Excellent. Thank you, Julie. So with this, we will move on to our last segment of this Industry Day with our Assistant Deputy Director of Supervision and Operation, Ryan Lee, to present the final session, Lessons Learned from FINTRAC Enforcement Cases. Over to you, Ryan.
Merci Geneviève. Notre dernière session a pour objectif de vous présenter quelques observations issues du terrain afin de promouvoir la conformité future. Cette session ne comporte pas trois diapos, je pense, mais elle sera donc brève, mais nous espérons qu'elle vous sera utile. So, as many of you will have seen in recent headlines, FINTRAC remains firmly committed to safeguarding Canadians and protecting the integrity of our financial system. Our enforcement actions are not just about penalties, they're also about learning. So today, I'd like to reflect on some recent compliance cases, of course, very sensitive information, so I'm bringing this up to a very high level. And I'd like to share, some key lessons that emerged from some recent compliance actions. The insights are really intended to help you strengthen your own compliance programs, reduce your risk exposure, and align more closely with your own obligations under the PCM-LTFA. So the session is about sharing some common gaps in compliance. But before we dive in, I'll just note that given the time constraints, and we're on the last session, we won't be presenting sector-specific observations today. Instead, what I'll share reflects common compliance challenges across virtually all sectors regulated under the Act. Il s'agit d'informations générales, mais elles peuvent être très pertinentes pour vos activités, quel que soit le secteur dans lequel vous évoluez. So these are high-level insights, but they can be pretty relevant to your operations. So I'll begin very quickly with a brief overview of administrative monetary penalties, or AMPs. So, as most of you are aware, AMPs are one of FINTRAC's key enforcement tools. They're issued when a reporting entity fails to meet its obligations under the PCM-LTFA or its associated regulations. So it's important to understand, highlight this, and I emphasize that AMPs are not punitive. The purpose is to encourage compliance and not to punish. So if an assessment, a supervisory assessment of a regulated business reveals non-compliance, FINTRAC may be in a position, of course, to take enforcement action. And you've seen that in recent headlines over the last number of months or year. In determining this action, FINTRAC first considers the category of violation. So a minor violation is typically procedural or technical, such as an incomplete field in a report, for example. A serious violation is one that could hinder FINTRAC's ability to carry out its mandate. So that could include a business's inadequate risk assessment or training program. And a very serious violation is one that is systemic or egregious, that significantly undermines Canada's AML anti-terrorist financing regime, such as a failure to report suspicious transactions altogether, or knowingly submitting false or misleading information. So once that category is determined, the amount of an administrative monetary penalty is based on three core criteria. Firstly, we need to look at the purpose of the penalty. Again, is it to promote compliance? It has to be yes. Next, the harm done by the violation. So that includes both the potential and the resulting harm of that violation. And lastly, the businesses or reporting entities' own history of compliance. Of course, we factor that in. If there's a concerning pattern of non-compliance and we reveal further non-compliant activity, that's certainly a consideration when determining the penalty. So we do apply a structured methodology to assess these factors. It's all available online. The penalty amount is proportional always to the harm caused and is designed to prompt a change in behavior. So more recently, you may have noticed that we're increasingly transparent in what we say publicly as well. We have that ability to say so. So when we publish our AMPs, we're becoming increasingly detailed about the nature of that AMP. And that is an important strategic message to the regulated sectors, and oftentimes a learning opportunity for members of businesses of that sector to understand where some of the gaps are. Next slide, please. Are we on 64? No, stay there. That's good. Back. So I'll just spend a few minutes covering common trends and violations. So let's begin at looking at some of the reoccurring compliance gaps that we've identified recently. And I'll present 5 of them today rather quickly. One of the most frequent issues we come across in our more recent supervisory activities is a failure to submit suspicious transaction reports. Like usually noted in remarks a few minutes ago, reporting entities are expected to file STRs whenever there are reasonable grounds to suspect that a transaction may be related to money laundering, terrorist financing, or sanctions evasion. Si le comportement suspect persiste, les déclarations d'opérationnels suspects doivent continuer d'être déposées. So there's a requirement to continue reporting on new transactions that form that suspicion as well. That's key. The next gap, another common gap we've seen is incomplete or outdated compliance policies and procedures. And there's a theme there. I've been saying it. I said it. I mentioned it in the last session as well. Nothing static. So these documents need to be comprehensive, clearly written, and approved by senior officers. They should address all regulatory requirements, including ministerial directives, as we noted, and reporting timelines. And they require review. As an example, and I'm using very high-level examples based on a collective experience, we could observe a business whose compliance manual, for example, had not been updated to reflect virtual asset reporting obligations or recent ministerial directives. This gap could lead to missed SDRs. It could lead to significant supervisory findings. So policies need to reflect current risks, many of which are outlined in the National Risk Assessment, and they need to be reviewed regularly to ensure alignment with evolving regulatory expectations. Thirdly, we've also recently observed inadequate risk assessments, particularly when it comes to identifying and managing high-risk clients. So risk assessments, they need to take into account all the prescribed factors, such as client profiles, geographic risk, and delivery channels. As I mentioned in the earlier session, for high-risk clients, enhanced due diligence is essential. It includes regularly updating beneficial ownership and know your client information. For example, again, based on collective experience, we could have observed a reporting entity onboarding a client with complex offshore ties and high-volume wire transfers, but failing to reassess that client's risk profile and update their know your client records. So under the Act, and as emphasized in the National Risk Assessment, high-risk clients require enhanced due diligence, including periodic reviews, beneficial ownership verification, and scrutiny of source of funds. Fourth, we've observed training and awareness deficiencies, and that's another area of concern that we continue to see. Every reporting entity has to have a written, ongoing training program. All employees, agents, all employees and agents should be equipped to understand their obligations and recognize, in order to, for example, recognize suspicious activity and the evolving suspicions or the evolving trends in that area. For example, we may have observed staff unsure when to escalate unusual cash activity, leading to a series of missed STRs. So a strong training program ensures everyone knows what to look for and when to act. Fifth and finally, we've observed ineffective compliance oversight in businesses, regulated businesses. Your compliance officers have to have the authority, knowledge, and resources to implement and enforce the compliance program. So without an empowered compliance officer, even a very well-designed compliance program can fall short. For example, we may have observed a business where the compliance officer lacked access to transactional data or decision-making authority. So without proper oversight, even a well-written program can't effectively be enforced and adapt to evolving risks. Next slide, please. So from these trends, I'll draw together some final comments on expectations. First, it's essential that reporting entities fully understand and meet their obligations under the Act and the regs, of course, but that includes knowing the risks and vulnerabilities through the National Risk Assessment, understanding what is required, and implementing the appropriate systems that are scalable to the business, and ensuring ongoing compliance. And that seems to be a theme today. Second, compliance officers, as I just noted, they need to be empowered with both the authority and the resources to proactively identify and address the gaps. Third, risk assessments should be thorough, and again, another theme, regularly updated. They need to include clear mitigation strategies, particularly for high-risk clients, high-risk products, and jurisdictions of concern. And finally, all prescribed reports need to be submitted, of course, to FINTRAC in accordance with the regulations. Timely and accurate reporting is the cornerstone of an effective compliance program. It's not only there to, maintain a hostile environment to would-be illicit actors, but it's also a cornerstone of FINTRAC's ability to develop actionable financial intelligence in support of law enforcement investigations that go after the profit-generating criminality that threatens public safety and our economic wellness. Last slide, please. Alors que nous réfléchissons à ces conclusions, je terminerai par quelques remarques supplémentaires. So, organizations should develop systems, tools, or businesses should develop systems and tools and detailed policies and procedures that are tailored to their specific operations. So a one-size-fits-all approach is rarely effective. Compliance needs to be integrated into an organization's specific overall risk management framework. Next, regular training is critical. And again, it's a common gap that we've seen. Employees need to understand not only the compliance requirements, but also how to identify suspicious activity from the front line and navigate the reporting process and the application process of that. Next, I think the theme is quite clear. Know your national risk assessment. Know how it applies to your business and develop a complementary and comprehensive risk assessment. It's important to document the rationale behind risk ratings and to apply appropriate mitigation measures for high-risk areas. So by focusing on these areas, just to conclude, you businesses out there that are regulated can really strengthen your compliance posture and contribute meaningfully to keeping Canadians safe and our economy secure. So with that, I will turn it back over to Jen.
Thank you so much, Ryan, for all these insights. This is certainly very good lessons learned that can be used as best practices among all related entities. So thank you for that. Only one question, and the answer is very quick. So I'll go on. So once FINTRAC received the payment, where does the money go? So the response is the receiver general. So it doesn't go to FINTRAC specifically. It really goes back to a specific account for penalties. It is the same for all regulators as well too. And it is separate from cost recovery. It is not the same at all. So I just want to separate these two concepts. So with this, I think we're going to move on in closing. I want to thank you all for being part of FINTRAC very first Industry Day. It's been a privilege to share this space with you and to hear your perspective through today's session. Nous espérons que les présentations et les discussions ont été utiles et enrichissantes et qu'elles ont permis de mieux comprendre les priorités et les orientations qui animent nos partenaires gouvernementaux. We are grateful for the time you've taken to engage with us, and we hope this event has helped strengthen the collaborative relationship we value so deeply. Un grand merci à nos conférenciers et invités, en particulier nos collègues du ministère des Finances du Canada, notre directrice et chef de la direction Sarah Paquette, ainsi que Tina Matos, sous-directrice de la surveillance, pour leur contribution éclairante. We also want to thank you, the team that is behind the scene, that did everything today, Liam, Quinn, Megan, and Isha. Thank you so much for all your work on this. Before we officially close, just a quick reminder, after today's session, you will receive a short evaluation form. Please do fill it out if you want to hear more from us, specific priorities, specific topics. Please include it. Please include what we should improve or maybe what we should keep as well too. Votre opinion est essentielle pour nous, s'il vous plaît. Veuillez remplir le formulaire de rétroaction. C'est très important pour nos prochaines journées de l'industrie. On behalf of everyone at FINTRAC, thank you again for your continued partnership and for the important work you do every day to support Canada's AMLTF regime. Nous vous remercions sincèrement pour votre engagement et votre collaboration. We look forward to continuing this dialogue and seeing you at future Industry Day events. Prenez soin de vous et à bientôt. Merci.